Welcome to our 2020 Africa Roundup interview series, a series of conversations to round up this extraordinary year with leading advisors and voices both from Africa and outside of Africa. I have the pleasure of speaking with Saleem Sheikh. For those that don't know Saleem, Saleem Sheikh is the senior partner at GSC Solicitors LLP, Legal 500 recommended commercial law firm based in the City of London. Saleem advises private individuals and corporate clients whose business and personal interests are international in nature, obviously including in Africa, where he has a big practice. A prominent figure advising on wealth management, Saleem is recognized in the City Wealth Leaders list and is also a winner of the Entrepreneurial Individual of the Year in the Magic Circle Awards, included in the Power 100 Muslim, the 100 Power Muslim that comprises of people who have achieved excellence within their sector. Saleem has also been selected and appointed as the president of the UK PBC, a leading international business network. Welcome, Saleem, and thank you for taking the time to be with us today.
Good morning. Thank you so much, Faisal. It's a pleasure to be here, and thank you for inviting me.
Let's start with a short summary of 2020 in the context of Africa. How would you summarize 2020 and its wider impact on the continent?
2020 has been a challenging and unusual year for the whole world. I'm sure you'll agree, but for Africa has been no exception. Some countries have experienced unexpected difficulties. Others have had notable achievements. It's a big continent, over 1 billion people, and lots of resources. But overall, I think the continent has fared better than most people would have thought. Looking at broadly, some of the countries have had some good achievements, which we can discuss later. Others have suffered. Africa, as you know, certain parts of it are very tourist attractors, and obviously COVID has had a big effect on that.
Thank you very much, Saleem. That's an excellent summary, and you're right. It's been a mixed bag of challenges and opportunities this year. And let's take a deeper dive into that. How has Africa fared during this crisis? Any specific highlights, good or bad?
Sure. Yeah, I think, as you've said quite rightly, it's been mixed. For example, let me give you a few examples. Tanzania, 2020 has been a great year. Tanzania has been named the most fascinating tourism destination in Africa. A great achievement for them. Mozambique and Nigeria have also been considered exciting safari destinations. Let's move on to Uganda, another achievement for them. Uganda's quality coffee has been ranked third best quality in the world. Another good achievement by them. Egypt's done very well. The Egyptian economy has been praised by international institutions such as the IMF. I'm quoting now from the IMF, who've said Egypt is the only country in the Middle East and North Africa that has retained its credit rating with a stable outlook for 2020 and 21, and that's been maintained during the crisis. Ethiopia did very well as well. Again, another notable achievement. Ethiopian Airlines won Decade of the Airlines Excellent Award for the Africa region. A mixed bag. Let's move to Kenya. Kenya had a very difficult year. Kenya is heavily reliant on tourism, and sadly, due to COVID, the tourism numbers have fallen. Indeed, Kenya saw 72% fall in number of tourists. That's hit the economy very badly. South Africa has also had a very challenging year. South African women fighting for equal pay for men and women. That's been a big issue there. Lots of industrial unrest that we've seen, including unrest in civil society. Just like to focus a little bit more on Kenya. The Kenya Revenue Authority lost 7.71 billion Kenyan shillings in collections from retailers and wholesale traders such as supermarkets in the year ended June 2020. Again, the impact of of COVID has hit very badly. Social distancing has been a big issue for Kenya, especially in schools, primary and secondary schools. One of the government institutions has confirmed that have to construct something like 500,000 extra classrooms on top of the current levels to accommodate 20 learners per class when they reopen in January. Classes are normally pretty crowded. Tanzania Bank has said that the COVID-19 pandemic has made the banking industry embrace digitization and automation. Again, positive, people not getting out so much, so that industry has fared well. And I mentioned Egypt. I think Egypt has done very well and continues to do so. Less optimistic in Nigeria. Experts call for the financial system reform to tackle recession. Private sector operators, economists, development financiers have warned that failure to reform the financial system and provide proper incentives to finance production could lead to prolonged recession in Nigeria. So those are some examples of what's going on.
Yeah, no, thanks very much for that. That's a good snapshot into the largest economies on the continent. And keeping with the larger economy, so here I'm turning our focus to Kenya, Nigeria, and South Africa. How have family businesses and large corporates done during the crisis? Talk us through how the year has been for family businesses and large corporates in the larger economies in Africa.
Okay, let's take Kenya for a start. Looking at it at a high level, the Kenyan economy will contract by nearly 1.5% this year as concerns of a second wave of the pandemic are afoot. So generally, all businesses have suffered. Inevitably, you find the family businesses are more agile. They tend to adapt more. So some businesses have adapted quite well with the COVID restrictions, remote working. Some have taken advantage of the COVID pandemic to provide new levels of services, online services. I think the larger corporates have been a bit more sluggish. They've always slow to respond to problems on the ground. And according to my experience, they've been suffering slightly more. I mean, this is evidenced by the Kenyan government recording a huge decline in revenues because of the weakening economy. Nigeria, there's significant movement in balances and deposits to more secured bank, demonstrating confidence in the finance sector. And the banks are warned to strengthen against cyber security architecture. You probably know, sadly, there's a lot of cyber security, especially now, rife, and a lot of this appears to emanate from South Africa. So they have been warned to take better care of this, to put in proper governance. Devastating effects of COVID-19, notwithstanding the recent spike in the naira to dollar rate, have also exposed local airlines to more financial needs. Except workers, salaries, tickets, everything is denominated in dollars. Again, a major issue. So the larger economies are again suffering. I think sector-wise, tourism definitely suffered a lot. Manufacturing also. South Africa, again, I mentioned earlier, the mining industry as well has had significant problems in my experience out there. So the larger corporates generally, Faisal, have been slow to respond. They're responding. In my experience, and I act for a lot of large family businesses who often have better diversification as well. So they have different businesses in the larger economies, but also they diversified geographically a little bit more. I hope that helps.
Yeah, no, thank you very much. That's an excellent summary of how those two sectors are faring. In the context of international investment and specifically inward investment into Africa, what have been the trends and challenges you would say have characterized 2020? Okay, so Africa's economic growth this year will decline by about 3.5%. That's a significant decline. As global trade, financial flows, investments, tourism, and global supply chains have been disrupted, millions of jobs have been lost, and consumer demand and business investments have declined. With huge fiscal stimulus packages, interest rates are at an all-time low, which is important in Africa. Generally, it's a high interest rate economy.
Let's look at East Africa. The pandemic has been affecting the flow of investment throughout the world, including Ethiopia. Investment in the African continent has declined from 30 to 40% during the 2020 due to the pandemic. This is a quote from coming out of the United Nations Conference on Trade and Development. The Ethiopian Investment Commission said Ethiopia has secured $500 million from foreign direct investments during the first quarter of the current Ethiopian financial year in a bid to sustain confidence and encourage FDI. United Nations will increase Kenya's agricultural funding to 1 billion shillings to finance different subsectors, including the blue economy and the rice industry, to assist farmers affected by floods and COVID-19. At the moment, the country's annual rice production falls short of the national consumption, so they just don't have enough for local consumption, let alone exports. Moving on to Africa, West Africa, Trigger Foods will early next year expand into East and Western African regions as it seeks to grow its market share in the subcontinent. Since its founding in 2014, the company has sold 200 million bananas throughout its mobile supply chain system. It has since expanded to offer other foods, including vegetables. So again, you are seeing investment coming in more in technology, online deliveries, mobile services. The federal government of Nigeria has announced the commencement of its small and medium finance enterprise survival fund for the transport sector. That suffered significantly as well. It's understood that the transport track of the fund is available to every transporter who drives buses, taxis, any form of automation. So I think foreign investment will come through. A lot of it is also aid that comes through, but it's going to have to be sustained by good local partnerships with businesses on the ground. There are opportunities. There are lots of market conditions that are conducive to Africa. And of course, Africa is very, very rich in natural resources. In terms of agriculture, it's seen as the basket of the world. And I've personally seen lots of investment from China and Saudi Arabia into. Again, it's a mixed story, problems, but potential is there.
So I think you've touched on this a bit in your summary for 2020, but looking forward to 2021, and in the context again for family businesses and large corporates, whether these already have a regional or Pan-African presence, or they have ambitions for that, to have a Pan-African or regional presence. So these kind of family businesses and large corporates, where do you see the opportunities for them in 2021?
I think, look, Africa's been defined as the last frontier. It's a huge market, a great potential there. So I do see good potential there. I mean, there have been some helpful movements. Let me summarize them for you. The African Union leaders have approved trading to start on 1st January 2021 under the African Continental Free Trade Area, AFCFTA. The launch of trading in January 2021 will lead to a deepened continental integration throughout the regions and would be one of the most significant milestones in the continental integration project. This will boost inter-African trade, promote industrialization, competitiveness, unleash regional value chains, and facilitate Africa's integration into the global economy, which would be great opportunities for family businesses and large corporates, as well as SMEs to be involved and share the growth across the continent. Africa 50 is a Pan-African investment forum launched by the Innovation Challenge in 2019, attracting 673 solutions, of which 80% are from Africa. The solutions were assessed on their innovativeness, scalability, modularity, sustainability, and readiness. Another Rwanda-based ARED group has also received investments for its solution, Shiriki Hub, to increase the adoption of internet connectivity in rural areas. That's again seen as a significant potential digitization. Infrastructure projects. that need new innovative collaborative approaches, leverage technology, provide tremendous investment opportunities for large family businesses and corporates. Smartphone industry. COVID-19 deepens economic uncertainty as consumption patterns are changing. The International Data Corporation, IDC, stated that the growth of the smartphone market was caused by the release of pent-up demand after countries eased their 2019 COVID restrictions and a shift in vendor strategies to offer more entry-level flagship models. The rising unemployment rates and economic uncertainty caused by the pandemic continued to shift consumer buying patterns forward affordable and feature-rich products. So again, the demand is there, perhaps now for cheaper products which have better features. According to research, prospects of 2021 will depend on improvements in overall economy, which will largely be dictated by the availability of the long-awaited vaccine. Of course, now we are seeing that in the UK and the US. Checks showed that to cushion the effects of bad economy on their finances, more Nigerians are embracing smartphone financing schemes. The schemes allow allow intending users without adequate funding to get a device of their choice after making an initial deposit, with remaining balance spread over the period. Let me say about our own firm. So we are a UK-based firm. I originate from Kenya, but we do a lot of business in Africa, inward investment into Africa, and as well as investment coming out. So the pattern we are seeing is clients have, during this period, been assessing. There's a period of consolidation, but there are huge potentials, especially as you look at the Western markets that have been hit. Retail, online's become huge here. A lot of people who've had casualties here are looking at Africa, looking at the potential of the market. So we see continuing prospects for Africa, notwithstanding the political and governance issues there are, which there are globally now. But I think e-commerce is going to play a big part, and we're seeing lots of clients, technology, finance, microfinance, using that M-Pesa model, which came out of Kenya, which become really a sort of a standard across the industry. So, Faisal, I think it's tough times for everyone, time to reassess, but entrepreneurs will always find opportunities, and I think that's where. And I act for lots of large corporates, but the bulk of people I advise are large family businesses, and they tend to have their fingers on the pulse. That will often have people on the ground, family members, extended family members, and I think that's where they really manage to score. Now, people in manufacturing, in retail, in logistics, in technology, tea, coffee farming, in South Africa, a lot still in the traditional mining industries as well. I hope that's helpful.
Yes, no, that's very, very helpful. I think I concur with you. The opportunities on the tech side, whether it's fintech or generally on the telecommunication side, it's shown us this year how important it is from a survival perspective. But I think next year it expands into daily life. Kenya has been a fantastic success. So has Nigeria, and obviously South Africa will have to embrace this more and more as well. So I totally concur with your thoughts there. In terms of international capital, obviously the continent needs to rebuild. It needs to attract this. How can African governments encourage and incentivize international capital to invest in Africa in 2021 and beyond?
Very good question. I think, look, to attract foreign capital, there is, Africa's no exception, actually. Every country, particularly developing countries, need to have stable economies. They need to have stable government, good governance, good infrastructure. So I think all the governments who want to attract foreign capital, which is needed, and also collaboration in terms of technology partners, etc., they need to make sure that there is the business environment is friendly, effectiveness to do business. I do a lot of work in other countries, Pakistan, India, where there is this one window approach, where if you want to go into that country, you go to one particular department and you can set up a company, set up a bank account. So Africa will need to continue to do that. Some countries have fared better than others, but I think certainly facilitating business, making money flow in and out. So often there is a risk of currency and exchange controls coming in. I think there is money around, and actually there's a lot of money currently looking to find good homes. So I think the governments in Africa need to look at other more success stories, see how did other countries attract capital. I mean, China is already investing substantially into infrastructure, railway. We've just built this new railway in Kenya, as you know, from Mombasa down to Nairobi. It will be a great success. But I think also people who are investing in Africa need to understand that it's no longer the case of you go in and take whatever you can out. You really have to be a part of the community. You have to build infrastructure. You have to build schools. You have to build communities and get buy-in from the local population as well. It's not just the government making it easier for you to come in. If you are allowed to go in, I think go in for the medium to long term. This is not a short-term play. The governments will work with you. They need foreign funding. They need good capital and technology partners. But be prepared also to look beyond your own corporate and your own headquarters, beyond into the communities, like the Chinese community have done, who built schools, libraries, hospitals, education centers, health facilities, to help the local communities as well. And I think if you do that, you're giving as well as taking, you will be successful. I think the days of just going in and plundering resources are long gone, thankfully. That will not happen going forward. And I think the governments themselves are not receptive to that. And if the governments feel that that's the strategy of a corporate or an individual, I don't think they're going to be very successful.
I think that's a very good point. True collaboration, true partnership, knowledge exchange, knowledge share. This is the reality of business, at the moment and for the future. Final question from me, Saleem. How will Africa do in 2021?
I think, Africa, although it is a continent in itself, it's fragmented. Clearly, there's a north-south divide. Sub-Saharan Africa has always seemed to have done better. I think Africa will, I don't think there's going to be a huge success if you look at Africa globally. I think the economies will struggle. I think there will be some pain, but I think there's also some very good initiatives coming through. So overall, I'll give you a straight answer to your question. I think that it'll fare reasonably. I don't think it's there you're going to see big collapses, and I don't think you're going to see massive increases either. I think it's a year of consolidation, a year of reassessment, and a year of redefining economies, new business models, just like the Western economies are. I mean, look at us. I'm working from home. I'm normally sitting in my office in the city of London, and for the last 8 months, I've not been. Economies are changing here, and I think the same way out in Africa, whether it's delivery systems, new methods of farming, new methods of manufacturing, more technology. If you're building factories, you've got to make sure that they're safe. Standards of hygiene and sanitization have to be increased. So I think there's a learning process. The world is learning. Africa's no exception. But being African and Asian and British, I'm very confident that Africa will do well. And we are certainly investing into Africa. We have more resource going into Africa. We do more visits into Africa. Certainly sub-Saharan Africa, we're working a lot in, but we're now working more towards North Egypt as well. One of my team members at the firm is from Egypt. So we are Pan-African as well. So we intend in due course to open an office in Africa. Currently, we have very good collaborations with good law firms, and that works very well with us. If we go in, it'll be a sort of a base to assist existing clients and work closer with our partners in Africa.
Excellent.
Thank you.
Thank you so much. Thank you for sharing your insights with us, Saleem.
It's a pleasure.
Thank you to our viewers for watching. Until next time, stay safe.